All right, let me bring up our. All right. Can you guys see my screen? Drop a one in the chat. You guys can see the screen. Cool, cool, cool. You see the screen? Good. All right. All right. So this class is our first of three, a series of psychological classes I want to do, just to make this a complete ecosystem for everybody where we can touch on everything as we continue on with our learning and our progression here. One second. All right. Trading psychology, mastering your mind, a complete trader psychology guide to self awareness and impulse control. Um, if you looked at the first video in the Holy Grail, like the core content, I talk about this as framing yourself for success. So if you haven't watched that, it's a good video to watch so you can kind of get a good basis on how to, like, because for me, what I believe is the psychology part is like, yeah, they're gonna tell you be disciplined, and yeah, they're gonna tell you all these cliche things, but really, for me, I feel all that boils down to being self-aware because you can't be disciplined, you can't not over leverage, you can't not over trade until you are aware of your actions in the moments, you know, and you're not running on autopilot. So digging into your self-awareness is huge with trading. I mean, for my journey, that's I've been that kind of individual in my life as a young man growing up, been very self-aware. So trading it became a little easier for me because I can create those triggers in my head and remember I can remember, which that's what the self-awareness is about, being remembering in the moments when it counts, right? And controlling your impulses. So not getting in prematurely, um, not jumping in before you feel comfortable or you confirm your actual why you're getting in and why you're getting out. So these are the things we're going to touch on in this three-part series. So the foundational concepts, of course, we know most traders fail, not because they can't understand the concepts or read the charts. It's a psychology, which we all know. This is nothing new. Most of the profitable traders are only winning 40 to 70% of their trades. Now sometimes you might have a streak of where you like. Sometimes I hit a streak where I'm like I'm not missing, but over time it'll even out about this. But you could still be very profitable winning, but between this percentage, long as you managing your risk right, and your leverage. And when you take a loss, you don't over leverage trying to get it back. When you take a loss, you leverage down. You don't fall into bad habits and spiral out of control. You're gonna lose. Like no matter how good you are, you're gonna lose. The market, either your own personal interpretation might be wrong or how you looking at it, or the market just can do something opposite of what. That's why it's all probability, right? If it was all for sure, somebody would have been to figure out a 100% model if it was one there, but it's not. Right? A trader's brain, an emotional playground. So fear and greed cycle, that's what's driving most of the decisions as traders. Right. So basically, that's what I feel as traders that we fight the most with, it's a seesaw. It's a seesaw of fear and greed. It's a seesaw of I don't want to miss out on this trade. It's a seesaw of that type of fear, or it's a fear of I'm scared to get in this trade, right? So I miss it. There's a greed cycle where it's like, hey, I'm either over leveraging because I wanna try to maximize and squeeze all the juice out of this one trade, or I'm holding my trades too long, and holding my position size too long, and the market turns around because I'm trying to squeeze all the juice out of each trade. And I'm actually by being greedy, you lose more money, right? Because you usually end up holding your trades too long. That's why for me, just me personally, I'm very big on paying yourself through the trades. And that's why, like, if you get multiple contracts, pay yourself through it. That's gonna affect you less with this seesaw of fear and greed. If you run up a bag, you run up 100, 200%, you take 50, 60% of your position off, right? Then now you have less fear. You can't miss out. You've already made money, right? And you have less fear returning against you because you already made money. You can actually let the trade breathe a little bit better, in my opinion, psychologically. And you don't let the greed, you've already paid yourself, right? So you can not be as greedy. And those, like a lot of time, my runners, they do the most damage. And like I said, this is not like you know, this is just how I like to do it. What's comfortable with me is my psychology. I like to take positions off, right? Especially with this market. The thing could just turn around on you on drop of a dime, right? So I'm more comfortable um taking some off at 200%, right? And then take another chunk off at 400, 500%. Then another last few contracts at 800, right? Those last couple few contracts, they do a lot of damage with way less risk, really no risk. Because at the point when you have a couple contracts at risk, if you paid yourself through it a couple times, even if you lose all that money, like you still in the green. So you can really erase this cycle by doing that. I would say I'm not erase it, but reduce the impact of it. Right. Next, stress impairs logical decision making. This could be life stress. This could be just anything stressful that can affect your behavior. Whether that's job, whether it's spouse, anybody, it can affect if it stresses you, it's going to affect your decision making and your logic in your brain, right? And dopamine addiction from winning trades creates dangerous patterns. I know for a fact, I've experienced this. I know for a fact that people in the group have experienced this, where you just on a hot streak and you full of yourself. Like when I was like 2022, when I was like really getting the ICT stuff, and I'm just like, man, I can't. And like that market was a little different. I was just in the 2022. It's like, man, I can't lose. I'm like, it's going right where I say it is, like and I just got on this high horse, and I got humbled. I done got humbled. And it's going to do that to you. So you don't want to fall into like using trading to stimulate neurotransmitters, right? I mean, your dopamine, your serotonin, all these feel good neurotransmitters. You don't want to trade based off that, right? Because you're chasing something instead of focusing on your strategy. You chasing that win, that feeling from winning and being right, really. Um, so you they can create dangerous patterns, and it can actually have you spiraling out of control. If you win, 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 and then you lose, then you're like, hold up, let me go get that back. Then you lose again, you're like, man, hold on. Then you lose, and now you're trading. You're not basing it on you basing it on something that's really not real. I mean, you're trying to get the money back when that's not what you're trading is really based around. It's based around your technicals and taking risk management and stuff, right? And being mindful when you do lose. Hey, let me chill, reset. So what I've been cultivating within myself more and more too is just this when the day is over, reset yourself. Come into the next day, reset. No matter if you won, you lost. Like if you lost, obviously you're gonna feel some kind of way. right? But you're gonna need to look at it as part of the game. It's a game that happened yesterday. It's not today. And I'm gonna give you some things you can do in this first part where you can kind of gauge yourself on whether you should even be taking the trade. But this is very important. Let those days be gone, right? Right, exactly. And the Reed said detachment. Detachment is huge because you can actually trade based on what you know and what you see, and you're not letting your P&L scare you out. You're not letting those candles that jump real. You know when them candles like sometimes they move and they jump real fast, and you're like, oh shit, and they try what it's designed to do is scare you out. It's designed to scare you out of your trade, right? Or it's designed to put you in the wrong position so they can turn you into food. So if for me, detachment has to do with your leverage. It's much easier to detach when the money is not you're not as emotionally connected to the money, right? So for example, if you go into like a cafe or something and say you like I'm gonna get me a bacon and egg croissant and cafe con leche, and you go in there and you spend $11, right? And it's not all that. It's like that wasn't really all that good. It was okay. The coffee was kind of not sweet enough, and you just okay, that wasn't that good. And then you go on with your day, right? Now, if you go into a place, say you go into Burns Steakhouse, you go into a nice restaurant, Roof Chris, somewhere nice to get a good steak, right? And you're gonna spend with drinks, you're gonna spend about 300 and some bucks, right? If you go in that place and you have the steak is not cooked good, it don't taste good, the drinks are weak, you're gonna feel a lot stronger about your experience with it. Because why? You pay more money for the experience. So you're more emotionally connected to the experience because the money you put up. So it's like trading. If you putting up like to your account size, right? And it's all relative to you and your risk tolerance. Some people are more aggressive. I'm not very aggressive with my leverage, like because like it's buses that come every day, right? But I'm I trade with an amount where I'm comfortable. I could be detached from where I'm not. I'm okay. It went down 1,000 or whatever. It went down nine. It went down two. I'm okay. I'm not letting the P&L affect my decision. I'm just basing it on what I see. So detachment is definitely key. Definitely. So here, self-awareness framework, the stop method. So this is going to help you become it's going to start igniting the habit of being self-aware, pretty much. Because you can say, yeah, I'm self-aware, but when you in that moment, you're not. You're really unconscious. You're on autopilot. So we're gonna go with something called stop method. So stop. That's gonna be an actual physical pause. So whether you're trading on a tablet, laptop, your phone, what it's gonna mean you literally stopping. Like really take your hand off the phone, take your hands off the computer, off the mouse pad, and just stop for a second, right? You want to stop for a few seconds. Like you see one Mississippi, two Mississippi, three, and then make your entry. Like I've talked about this before, like it's different parts of your brain on how you make decisions. There's a logical part, there's a limbic part, like a part that's based on fear and protection. The part that's based on protecting you is based on habits. It's gonna react. So the reason why you want to try to stop and give yourself a little time, because that logical brain that has all the trading knowledge you learn and all the things based on your setup is going to take slightly longer for it to actually form an idea, right? So when you take a few seconds, you actually let that brain work for you, and it will present, okay, no, either yes, this is a line, everything is good. I'm not being impulsive. It's a go, or nah, hold on, let me wait. But if you just react, then you call it an autopilot. It's habits. Your brain is basically a computer. So you gotta reprogram it to the right habits. So it's not reacting. And even when all your reactions are based on logic and your reason, your higher reasoning brain, right? So, like I said, physical cues, take your hands off the mouse, lean back in the chair, pace a little bit, wait, and break the automation. Because the most bad trades happen when we're all on autopilot. I can guarantee you. And like I still do this now sometimes too. Like there's no perfect psychological. Oh, you got it. You just get better and better by mastering yourself, right? You're still gonna have lapses where you jump in something. You're like, you know what? I should have probably waited because there's a lot of variables we looking at to get in sometime too. So sometimes you might forget you're human and you get in, but as long as you're aware, you can recognize it and like, okay, I know entered prematurely. How do I want to deal with this? You know, like, and you can guide yourself from there. But as long as you are able to maintain some type of awareness, you're doing this, stop and like checking yourself, you're less prone to make bad decisions on autopilot off bad habits. Hope that makes sense. T, think, the emotional check in, the four critical questions. What am I feeling right now? Mad, excited, frustrated, desperate, invincible. What happened in my last trade? Did you win? Right? Did you lose? Meaning, like, based on what happened, if you won, you don't want to come into your new trade and take an overconfident risk. If you lost, you don't want to come into that new trade and take a revenge risk. So it's important that you ask yourself what happened because a lot of times it's going to uncover what's your emotional state coming to this trade. If you just simply ask yourself, okay, you might be feeling these things but not identify them with yourself. But if you ask yourself, it'll help you be self-aware of them and identify them before you enter. Am I trading a plan or trading my emotions? Right. And that's going to link back to here. If you can, like I said, just square yourself every day, square, come reset, approach the same play, like same way you did yesterday. Don't ride the wave. It's okay to feel confident and accomplished and happy and embody that, but don't let that come into like your decision. Still take it day by day in your trade, right? So you're not trading on habits and emotions. Will you take this trade if this is my only trade of the day? Like meaning like this is your only trade you could take of the day. Will you enter this? So that should help you be more mindful about the quality of trade you're entering for that day. Right. So these are the four things you want to ask yourself. And I'm reading them out to you, but these can be answered to yourself within 30 seconds, really. Like, what am I feeling? How I feel? Yeah, I feel good. I'm cool. I feel good. Okay. What happened my last? I won. Okay, I'm gonna make sure not I go in and not be riding that euphoria and I don't over leverage. Cool. What's my trading plan? No, I'm not basing on emotions because I'm not feeling it. I already assessed my emotions beforehand, so I know I'm even killed, which I'm gonna give you an emotional scale here. Would I take this trade? This is a high probability trade, pretty much. You can answer these questions to yourself within 30 seconds, right? Which is good. So you can ask yourself this before you get in the trade. It's giving you that time to process everything before you enter. Here's your emotional scale. So got 1 to 3, calm, analytical, detached. I should have added here. That's your green, light green. You're good. This is the optimal where you want to be. You detached, you calm, you're not overly excited, you're not mad by what happened yesterday. It's like, yeah, cool. I'm really gonna take what the market gives me and trade it. 4 to 6, slightly emotional, meaning like, okay, whether you won or lost the previous day or two, if you're feeling a certain way, just be mindful of it so you don't go and enter that trade based off of it. You really want to try to guide yourself back here where it's like, okay, man, I'm feeling a certain way. Let me chill. Let me analyze. Okay, I'm only gonna take the trades that come to me. Let me get back in my. You have to reaffirm yourself a lot of things through trading. It's not like even with the concepts, that's why I always just preach, watch this shit over and over again, right? Because you got to reaffirm to yourself certain things, even certain things that you knew you learned, just reaffirm them. Just reaffirm them, right? Highly emotional. don't trade. If you're feeling hot because you lost a lot of money, right? Or you feeling good because you won a lot, just take a day. Just take a day. Or if you do trade, go very light leverage. Just take a day or take a session. Just take some time. Don't enter if you feel strong emotions um of like frustrated, desperate. Like don't enter, just wait and let talk to yourself and let it subside before you enter, because you're gonna base your decision off the emotion instead of the actual the technicals and being detached and what you're really seeing. Because you like these emotions, like have you seen? They say have you seen red, right? Because it's gonna affect what you see. It's gonna affect your perception. If you feel an emotion or what you think you see, you might not be seeing just what you want to see. You know. So, all right. If this is resonating with y'all, let me know in the chat. Drop a one. Let me know how you feel. Let me know if this stuff is resonating with y'all on a psychological note. Cool. Observe the strategy alignment check, right? Pre-trade checklist. Does this fit my proven setup? Does this fit a setup that I've had success with and I feel comfortable with, right? Is the risk reward ratio right for me? Meaning, this goes back to your trader alignment. Am I scalping, day trading, short term swing? If so, where's price trying? Where am I trying to take price? Where is it drawn to? Um, and what invalidates my trade, right? What's going to invalidate? Like if the juice is worth the squeeze, pretty much, that's what you're asking yourself. Like if you're at the bottom of a range and you're about to go into a discount and we're bullish, you might not want to take a trade that's going to just dip in the discount, then automatically turn around. You might want to just wait for it to actually reverse at that point. Am I within my daily or weekly risk limits? This is all personal based, like on how much you can stomach losing, what's your risk according to your account size. Um, I know people have these percentages, like I'm not saying don't go by that. I never went by that, to be honest. I would just go by a rough percentage. Um, it's not like, oh, I'm only risking 5%. Like if you got $1,000, $500 in your account, I'm gonna tell you to risk 5%. You ain't gonna grow the account that way. You gotta take risks, right? So it's all like I will say the more money you start making, the easier it is to control that risk. If you got $10,000 in your account, then it's like, well, don't trade with more than two or three of that. Don't trade with more than 20, 30%. I'm not saying risk that either. I'm saying leverage that, really. You don't have to wait for you to lose all 30%, 3,000, 2,000 bucks. This is what you leveraging, but don't go up past there. That's how I kind of did it. Like I would do a lot, and I would keep my leverage low because I'm able to hit nice percentage sizes, so it will compound your account. Do you have a clear exit strategy for both profit and loss? This is one thing you should have before you enter a trade. So when I see some people say where you think it's going to, or they already in the trade, where you think when would you get out? Like that means you shouldn't have got in that trade because you should already know. It should be clear to you. Hey, this what invalidates my trade. This is where I think it should go. Right. This is where I think it should go. And if I see this structure fail, I'm getting out. That's the exit plan. A draw on liquidity or your structure failing, and you have a maximum loss for that trade. What invalidates it? Like, hey, I'm trading a weekly profile. We hit into previous week's range. We reject it. I got into a swing. Now, previous day's range is going to validate or invalidate my trade. If we stay within it, I'm still in. Right? If we violate it, I'm cutting it. So you should have these clear rules mapped out before you enter a trade. and what your you should know what your alignment is. That's I think it. I wonder if I should do a video, but it's huge to know your alignment because that's how you're gonna guide whether you should be getting out or not. Like you don't want like I see some people they and I'm not like picking on nobody or nothing, but it just I want you to understand. Just think about it scientifically. If you're trying to be a scalper or a day trader, then you don't need to buy contracts for the next week. Or if you're trading like an indice, you don't need to buy contracts necessarily 2 or 3 days out because you planning to get out that same session a day. So you're basically overpaying for contracts if you're trying to be a day trader. But if you have to know that before you enter. I'm trading a weekly profile. I'm short term swinging this. If I already got that plan for that trade, then I'm already gonna know where to pick my strike prices at. Um, like my position size, I'm already knowing what I expect it to go at. So I know how far to buy my contracts and what invalidates it, what structure, what higher time frame invalidates it. Right. So if I know that I'm short term, I'm gonna have a certain set of rules for that. If I'm day trading, then it's like, well, I'm gonna pick the same day contracts up, maybe next day, you know what I mean? To day trade it because I'm just trying to get in and out that same day. So you don't want to get in a trade and just like, well, I'm just going to at least have a plan. And if it give you more, let it give you more. But you don't want to get in the trade like, well, I'm just getting in. I got 2 weeks out, but I'm just letting it go wherever it goes. But what if you got in and you got a contract 2 weeks out? You overpaid for it. You spent too much premium for what you're trying to accomplish with it. If you got day trading targets, I hope that makes sense. Please align yourself with your trader alignment. You don't have to be one, but for each trade you take, it should be one. Like, hey, like on days like today, I didn't trade. I traded futures last night actually. And I traded futures last night in London when it dropped. But today I'm like, you know what? I'm not gonna trade it because it's Monday, no news. Um, Tuesday, no news. I'm probably gonna sit it out. I'm gonna look at the market, but if it's that first 30 minutes and it's not showing you really nothing, like it's trying to go nowhere, usually it's gonna accumulate a lot of time. So but if I were to trade it, like maybe tomorrow I would trade because it's Tuesday, shouldn't accumulate back to back necessarily. I might, hey, I'm gonna be a scalper tomorrow. So that means if I trade IWM, getting same day contracts, I'm gonna get it like a strike or two out the money, maybe. I'm just trying to trade AM session impulse until 10:30. Once I do that, I'm probably gonna cut 90% of my contracts, 80% of my contracts, and then if I want to get more, let it. If it don't, then cool. Cause I align myself with being a scalper that day or a day trader, right? So this goes back to this: my position size calculated and not guess, right? That kind of goes in what I was just talking about. So the Y test. Can you explain someone your trade in 30 seconds? Like why you taking it, what you taking, and what's your goal with it? Like meaning like, okay, if I'm trading weekly profile, like, hey, what's your weekly swing? Hey, we rejected previous week's premium range, we displaced down, we already manipulated above true week open, we rejected out of previous day's range. I'm swinging this to Thursday. I'm gonna let a 15-minute and daily structure keep me in the trade. Boom. That's my weekly profile setter, right? So, of course, like as you learn, it might not be as smooth and crisp, but you should be able to like give a clear cut pathway of what your trading plan is. If you can't, then you need to reassess because it needs to be that way for you so you can navigate. It needs to be easy. Like, hey, if this, then that. If this, then that. Right? P. Proceed. Just the green light. Executing decision. Only proceed if all your checklist items are met, meaning your emotional level is on point between calm and slightly emotional, right? You could have a clear plan and thesis on why you're getting in, when you're getting in, your alignment. You're prepared to be wrong is huge, right? You're prepared to be wrong. You have to be prepared to be wrong in this game. When you're prepared to be wrong, that means that when it hits your invalidation point, what structure it is, or whatever your day trade swinging, once it hits that point, you're wrong. Get out. It's okay. That's preparing to be wrong, and not basing your trading on the dopamine hits on being right. You got to prepare to be wrong. So when it hit your invalidation point, you get out and you're wrong for that trade, and that is totally fine. Prepare to be wrong. Think about what you're willing to risk, not what you're willing to make that day. I'm willing to risk 2,000 bucks, right? I'm willing to risk 500 bucks today. If you think about it like that instead, man, I want to make 1,000. Then you'll be prepared to lose, prepared to be wrong, and you will regulate your emotions better if you do this. Because when you do lose, it's money. It's gonna sting like, oh damn, but it just helps you help you prepare for it emotionally better when you just keep this in your head. It's a part of the game. Your leverage right is like, damn, I lost that one. Cool. I'm gonna go take a walk, or I see another trade that's set up. I'll enter that one with less leverage. Golden rule: if you have any doubt that you can't think yourself through, walk away. Market will be there tomorrow or the next session, right? All right. Common triggers: FOMO, the fear and greed seesaw, fear of missing out. What it looks like is seeing a stock rocket up and just jumping in without analysis. Right? I mean, you could jump in because you see it going crazy, but that it's going crazy because it's manipulating. That's exactly what it's designed to do, make you jump in. Because if it's running bullet strong, like it's rocketing up, and you jump in and you buy, guess what? The smart money is selling to all those buyers that are buying, they delivering price up and manipulating it. Everybody buying in, they selling to all those buyers, and then boom, well, we reverse. So make sure you have your analysis. Chasing breakouts, that's pretty much the same as this, right? If it's already moved a lot, don't chase the trade. Just wait for the pullback. Entering trades based on someone else's chart. This is big. Now, when in the Discord, I got the trade ideas, right? So the goal of the trade ideas is to notify you on what things I'm looking at and what things that you like. Like the beauty of having a community is like nobody can watch everything at once. But with all of us, hey, KD might see this one over here. Sarah might see this one over here, right? Like Sage might see this one over here. Like so it's with our community, it's good to have all these eyes because you can't watch everything at once. But the trade ideas are for people to give you alerts on what to watch. Like I don't always tell people, hey, get in now. Like that's not my job, really. Like, 'cause how can you ever cultivate the skill of your own entry if I'm always telling you I'm getting in right here? And second of all, I might be managing my own couple of trades, and I can't tell you at that moment I got in. But that's why you have the education. So if I'm giving you the idea, hey, I'm looking at this for this day. I'm looking for previous day's range to hold. I'm looking for some manipulation. I'm looking for a reversal signal where market structure shift. Like if it doesn't happen, just because I say my bias is buried, if it doesn't happen, that don't mean just jump in the trade. It means this is what I'm anticipating to happen. If it doesn't, it's going the other way, right? Like, but I can't lay every single thing out. That's why you have the education. But the trade idea, that's what they're for, to give you on alerts on some of the trades I'm taking or some of the ones I'm looking at to set up, right? So this goes for me and anybody else. Don't just jump in trades based on someone else alert because you don't know why like they're getting in the trade, how long they're getting in it for. Like this person might be entering on the day to swing for a month, right? And you entering and just catch it that day, and you're like, oh man, it went up and then it went against me. but that person got contract 3 weeks out. So they preparing for that little. But if you being a day trader or something, you might not be able to handle that, right? So just the charts and everything that people post, including myself, just take it as a like of course you can take some of the trades they hit, right? But just take it more as an idea for you to watch and notice, right? But do your own analysis. Psychology, everyone making money except me. That's the fear of missing out psychology. You don't want to see everybody run it up. Not that you don't want to see people win, but you don't want to feel left out, right? That's the triggers behind the. This is what it's looking like. How you combat that? The bus rule. There's always another bus coming, right? Or a train. If you're in New York, LA, or somewhere, keep a missed trade journal, track how they perform. On certain trades that you take, if you're taking them and you notice that, hey, this ain't work out, because some trades that you might miss is not that you missed your analysis, you missed your execution, right? So you want to keep it like I'm not huge on journaling. I do write stuff down, especially earlier on. I would write things down, but I keep a lot of stuff in my head and I remember a lot of stuff. So I'm like, hey, when I was trading this weekly profile, these are the lessons I learned. I write it down, right? So just track that. Focus on your next plan setup, not the one that got away. Right? Don't focus on the one that got away. They're gone. Um, Focus on your next plan setup. What's next? That bus already left. They full, so cool. Set alerts for your setups instead of watching the charts all day. So if you're not sure how to do that in trading view, you can any line you draw in there, you can set an alert on it, and um you can set push notifications. They'll come through the top of your notification just on your phone, and you can name what you want. Hey, we crossed this level. Hey, this crossed this level. So you can set alerts on your on your tickers too, right? So therefore you'll have trades already charted, set up for you. Or if it's a trade I put out, you see what I'm seeing. You're like, okay, cool. You got alert ready, so you're not trying to bounce between a whole bunch of them, and you missing one. Now you feeling FOMO because you missed it, and now you looking. It's just a whole cycle of bad stuff, right? Revenge trading, what it looks like: doubling position size after a loss, taking random trades just to get even, abandoning your strategy after two or three losers, right? So this is something you can't do. It takes time and data really to analyze a trading strategy or you using the trading strategy. So sometimes you might just be it might be your own interpretation. It's not that the strategy is not working. It's like you just need to reset yourself. But don't just give up if you lose a couple times on a strategy. Just work it out and figure out. Remember positive feedback loops. Why did I lose those two or three times? Was I just wrong with my direction? Did I take a bad entry? Did I get out too early? Did I over leverage and jumped out because I FOMO, right? Or I was on the greed side of that seesaw. Trading outside your market and time frame, right? So this is all relative to you on what you trade and when you find the most success. Whether you trade the PM session scalp or your AM session, like go with what you know, what most familiar with. This is revenge trading. I mean, you just jumping in because you're just trying to get it. It don't matter, right? And that's against the rules. Psychology. The market owes me money, man. The market makers, man, they targeted me. They knew I was gonna do that, man. They do that. No, they don't. We chump change to them. We collateral damage pretty much, So it doesn't owe anybody nothing. It's gonna do what it do. It's our job to take the money out of it, pretty much. You can only take it. You can. This is what's the beauty of it too. One of the only places where you can take money. Nobody has to give it to you. Nobody has to write you a check. You don't have to wait for clients to pay you. You don't have to wait for contracts. You don't have to wait for invoices. None of that, right? You can take money literally. It's all based on you. How you combat revenge trading? take a timeout. No trading for 15 minutes after any loss. Take a walk. It's pretty hot outside. You might just want to just take a walk, chill for a second, make a sandwich. If you reach your daily loss limit, stop trading. Market doesn't know you exist. It can't be against you. The reset ritual. Close the platform, take a walk, come back, refresh. All right. So I want to touch on this. Stop at limit. Easier said than done. Easier said than done. But that's when we integrate what we talked about at first, the stop method. If you lose, just stop. Pause, remove yourself from it. Just take some time, count some seconds, take your hand off the chart, off the mouse. It's going to prevent the impulse from falling through. If you can do that. Like, there's no easy way to escape yourself. It'll tear you up, man. Trust me, I know, man. I know. I'm gonna tell you all this from experience. You know, it'll tear you up. And then you look back, it's like, damn, why was I trying to jump in the trade here or there? When if you go back and look at that day, you see this is not a good day to trade. You know, it would definitely tear you up. But like using that stop, man, even just the physical drop your phone. That it's the technology is so accessible to us, so we could just get to it. So if you just use the physical, take your hand off the phone, back up, take a deep breath, do a little meditation in your head. It's all right. Get some affirmations to yourself. You can stop for that day. Study what you did wrong or look at something else, right? Overconfidence after wins. This is that euphoria that my boy um ICT Wick talk about, euphoria. Overconfidence after wins. What it looks like. Increasing position sizes after a winning streak, taking lower quality setups because I'm hot, I'm hitting, right, man? Right? Skipping risk management because I can't lose. Skipping risk management because I can't lose. Skipping risk management because I can't lose. This I'm telling you, this will kill you. If you win five, six trades in a row, like I've known, like if you win that many in a row, then it's like you still have. That's why I say you got to reset so you approach everything the same. You don't get sloppy. Just reset. Take your time. Don't skip it, right? Because now it's like, oh man, I done ran up a bag, but now I'm risking the bag. So now if I lose, then all that bag I just ran up was just for nothing, right? That's the biggest thing to growing your account and keeping it like once you grow your account to a certain size, then you keep your leverage low, it get way easier. Right? If you got $10,000 in your account, even $20,000 in your account, whatever, let's say even 10, and you're only trading with no more than 15,000, 1,500 of it, maybe 2,000 at the most at a time. That's how much you're putting out there, right? If your strategy is working, you're winning trades, then you it's gonna be hard to slip back unless you spiral out of control and over leverage. But if you're trading the right ways, like most of us are getting at least 100%. Like that's minimum for our group. Like we at least doubling the money when we trade. That's just a standard issue, right? Percentage pretty much. In the certified printers world. But if you look at it like that, then you know, okay, hey, I put up 1,500, damn, I lost six, 700, right? I put it up again. Okay, now you won. Like now, if you take a few losses in a row, I would recommend okay, dial back your leverage a little bit and take a break and see what's going on, right? But once you get to a certain amount, if you keep your leverage real low, it get easy. Like it's easy to get to. You get to 10, 20 grand. Not like you see what you can do with 1,000, 2,000, even some you see what you can do with a hundred, 200 bucks in the trade. You turning that into 300, 400 bucks, right? So imagine if you doing that with 1,000, right? You just keep things in perspective. Don't get caught in the hype, man. It don't really take a lot for you to like have your freedom or whatever you're trying to get from this, man. Like let them big bangers come to you. Just keep the leverage low. Adding to winners without proper analysis, right? And the psychology. I figured it out. I'm invincible. I've literally heard this from people, right? I got to figure it out. When it ain't that, it's not that. Because if that was the case, I would have like stopped. I would have been stopped teaching. I would have been like, I would just been teaching the same stuff. The reason why I learned more stuff, because the market forever changing too. It's the conditions changing. Like even with the stuff I've known, like I'm still relatively young in the trading world. Meaning like I ain't been trading 5, 10 years or nothing, but it's still things that you need to find out as especially with our geopolitics and the world is changing, the market's moving different. It's things you gotta adjust to, so you gotta keep sharpening the sword. So it's good to feel confident and embody that I'm a great trader. I'm because I'm disciplined, I make good decisions, I'm good analysis, right? Like, but also keep this in your head. Like you don't have it all figured out. You're not invincible. You could be great, but just keep that in your head so you don't let yourself get trampled by the euphoria. Stay small enough, long enough. You'll be big enough soon enough. Pause. That's facts. No, that is facts. Facts. Combat strategies. Like I said, you the same. Try to use the same. Not this is all relative too, because I'm not gonna be one of these people that be like, no, just use 5% every time. Man, that shit don't work, man. That shit is not realistic for most people's psychology. I'm just gonna keep it real. Like maybe in futures it's easier. Like just hey, I'm gonna trade this many micros this time, but if you're trading options and it's risk, if like this is like an A+ setup, yeah, I might throw an extra 100 on it, right? Or like just for I'm gonna throw an extra 1,000 or whatever on it. So, but you want to keep it relatively the same. That's all this means. Keep it a relatively the same size. Don't deviate that much from your position size until you see some exponential account growth. Meaning, like if you went from 5,000 to like $12,000, then hey, let me scale up a little bit and I'm gonna buy a few more contracts now. Just scale gradually. Track your wins historically, how long they last, what kind of more importantly, what type of trader fits your personality the best? Short term, long term, like you want to swing a month, 3 months, 6 months, you want to swing 2 weeks, a week, few days, or you want to day trade a scalp, right? Your personality should fit with that. That's what you should be trading the most, right? Not saying you can't work on those others, but take the path of least resistance. Like, and this changes too. Like me, I like the short term swing. Me, I like to take a contract like a weekly and then trade it for that week, or hey, next week's contract, get in this week and swing it into like the next week, right? That's what I used to love to do. I still do it, but not as much because the market changed. I'm just more comfortable. Hey, I'm gonna get in. I'm gonna take this day trade from here to tomorrow. I'm gonna take most of my position off and look for the next play. Or I still do it sometimes, but that's been my approach. I've been actually more day trading and next day trading. Swinging. Like swinging a couple of days lately. The humility reminder: keep a photo of your worst trading day, or keep a memory or a emotional planner like let's call it emotional almanac of how you felt on your worst day. You lost the most money. You felt like your worst day trade, you missed out on the most money, you lost the most. Like keep that close to you so you can always go back and reflect on it and remember and stay self-aware of it so you don't fall into this. Because then you don't want to feel this again, right? Celebrate, reset, acknowledge the wins, but then start each day at zero, like I said before. Like, I'm not like, this is not like robotic. Feel happy about it. You need to feel those feelings of affirmation, like, man, I'm great. I'm doing great. You need to tell yourself that. Talk to yourself, positive self talk, but then put it in its place. Don't bring it into the next day and you're trading with that same, it's like, okay, cool. Because part of you being, I'm a great trader, I'm disciplined, is having that awareness and not falling into the euphoria. That's part of it. So that should be, you should take pride in doing that. Like, hey, I'm not carrying this to the next day. That's part of being a good trader. So I need to keep embodying that. Lastly, oops, news, social media influence, what it looks like trading immediately after earnings announcement. Um, Not so much, especially with now with the earnings. What we learn, like it's actually good either to trade before, even after. If you don't, if you trade after, it'll still give you the opportunity a lot of time. Like the earnings might just be the manipulation, and then it can trend. Like you can get in after. Um, but maybe after big news events, don't just jump in because of it. Because you're, oh, you something on Tesla happened. You might, the news might come out, oh, this robo taxi is just doing this, but Tesla might fall and then go because it's falling to get discount buy before they go up, right? So don't just immediately trade off a rumor or news, right? Make sure the chart aligns. Following the call outs without understanding. You can't get in a trade because I call it out or anybody else call it out, or anybody else online you see call it out just because you see them call it out. Because how do you know when to get out if I don't tell you or somebody else don't tell you, right? You need to know this stuff for yourself and you need to take like call outs or you need to take stuff you see as an indicator to look at. Hey, let me check this out. Let me see what I see. You know, so you could develop a plan behind it. Don't just jump in because then it's like, okay, you jumped in, but you don't know when I'm getting out. And I might not be available to tell you, hey, I'm out. I'm getting out, and I'm not going to do that really because the goal is for you to be able to determine that for yourself. You don't learn. I don't want people being relying on just sitting there, and I want people to learn. That's the whole goal, right? So you have to learn. Um, and then when you do take call outs, you got your own understanding of it. You're more confident in it. You got your own things that validates and invalidates it, and you know where you're trying to take it, right? It's like good luck, Curry. That's a good call, but you still did the work. You drank the Kool-Aid still. I just pointed you to it. You know what I mean? Reacting to Twitter and Discord hype. That's all we touched on that. And making trades based on headlines. Like I said, we are. I don't think nobody really doing that in our group because we so locked into the time and price stuff. We're not just like looking at, oh, CNBC said this, I'm buying. Like that's the shit we used to do back in the day. We're not doing that anymore. We actually got some market mechanics under our belt now. We can make better decisions in relation to price. The psychology behind all this usually is like, oh, right here, oh, that's giving me the edge. Oh, I think it's gonna go up because it is. Wait, wait, wait. It might be a catalyst, but let the price show you still, right? Let the price show you. Yes, sir. Lastly, for this series, no news doing market out, check news. Yeah, check the news beforehand. So when you come and look at that calendar every week, you look at that before the week starts. So you already kind of got a plan. So you already come into the market that week well adjusted and seeing you already got kind of a little bird's eye view of what you can anticipate. That's why I know, hey, it ain't no news Monday. Look what happened today. It was shit price action today, right? We tap dance around the same spot for the most part on most things, because I've surveyed the news calendar already. That's how I knew that, right? That's how we know these things. So you wanna just like with your charting. Anything you're looking at, do it beforehand. So when you come into your chart to trade, you're not trying to do analysis and figure it out at the moment. You already done the legwork. You're just waiting for things to occur. If this, then that. If this, then that. Right? As you get more savvy and better, like some of the more senior people that have been with me, like man, hey, you could throw a chart up and then they're gonna chart it out like y'all see me chart it out. I chart it out in like 2 minutes. I know exactly what to look for. I know my little process. You could, but you typically still don't want to do that. But enter a trade, you want to take some time, chart it out, weigh all the variables, line your confluences up first. Then now you can make a decision when you come in the market start, right? Unfollow toxic influences. Anyone that makes you feel that bad or you missing out, unfollow all toxicity, period. I don't care if it's friends, family, anybody around you. Why? Because this it's stressful, and what we say stress is going to affect your decisions, right? So get away from stress and people that are just not affirming your growth. Just cut them out. You got to govern your energy. Govern your energy. Your edge is your strategy, not someone else's opinion. This is a fact. Your edge is your strategy. So first you got to find that edge. If you found it, trust that edge. Take opinions into consideration. All right. Cool. So that is it for this part. Like I said, I got more for y'all to line up and let this marinate. But I got like two more parts to this where we're gonna really get in depth about, some processes and some things. I just want to keep this nice and sweet and short. I don't want to go too long. So tell me what y'all think. Tell me key takeaways. Um, put it in the chat. Key takeaways. And if you like this, drop some fire, drop some printer emojis, and let me know y'all key takeaways in the chat. Yes, sir. Yes, sir. Stop and think. Yeah, I mean, I'm telling you, Nolan, man, that stop is crucial just to stop for a second. Let your real brain come into a play and take over, and then make a decision. I promise leaving that alone is gonna help you a lot because it's gonna put a halt to the bad habits of being on autopilot. That you can really make a and you'll be more comfortable with your decision in your trade too if you can if you actually got like if you'll be more like I said, if you more refined in what you're doing, you made a rational good decision and you didn't base it on like habits and impulse. That's what I'm trying to say. Yep, stop. Yes, sir. Start your mind. Yep, exactly. Don't be on that big confidence autopilot. It's like Kendrick, you euphoria. Yeah. What else we got here? Yep, mine says everything, Chad. Yep. KD, you already know. You already know what it is. GPS. Knowing what type of trader you are before moving accordingly. Exactly. Walk away, reset. Yes, sir. Stop slide. Yeah, you can go back, man. Maybe I could just turn this into a little PDF and I'll drop it in the Discord. How's that? That probably so you could just have it to reference because it's a few different slides. To yep, Stop had all the gems really like that was. If you don't take anything away from this, take that. Yes, sir. Yes, sir. Mindset approaching the market. Yep. You took an early and what you say, Nolan, you say you took a entry too early and very aware it plays will come to you. You just, yep, it will. They won't get away from you. But if the more like when you start stopping yourself, you'll start noticing stop. You'll literally start watching these thoughts flow by your head, like, get in, nope. Oh man, it's gonna go run. Nope, it ain't gonna run without me. You can literally start, then it's like, oh, like I always say, you're not your thoughts, right? You are the awareness observing them. You see these thoughts, and these thoughts are things that just arise within your space, really. But what happened most of the time, you become the thought, right? So it's like, oh, I'm gonna get in. You just get in instead of realizing, no, it's just a thought that you're aware of. When you start creating that space by stopping, you start seeing all of it fly. All these thoughts and impulses start gliding by you like a pendulum. Now, I'm not saying you're not gonna get caught up in it sometime. You will. You do. I do sometimes. Like, damn. But when I do, I know immediately. I probably take an early entry, but I'm cool as long as they don't do this. You know what I mean? I immediately gain my awareness right back when I slip. Yep. Have a clean. Have definitely have a clean entry and invalidation. That's key, KD. Because you don't know what's gonna make you get out. Then like just having a clean invalidation point in your trade is real solid. Like, hey, if it's cut and dry. If it goes past here, I'm out. Right. If we get to this level, I'm gonna be taking my positions off, and I'm gonna really watch structure and make sure if we hold, I'll hold some runners. If we not, I'm just gonna get out. Right. Have a target in your head before set. Exactly. Don't worry about it. Nobody else's plan, exit plan except yours. Right. Because you're the one that got to live with it. You're the one that got is your money. You're the one that got to feel comfortable with your decisions. Exactly. So I appreciate y'all with this one. I'll do another series on this class next week. We'll take part two of this psychological. All right. So y'all take care. I have this uploaded in the Discord later. Take care, y'all.